Hello and welcome to My Finance Teacher. Subscribe to the channel if you haven't. Hit the like under this video near the end of it if you think it is kind of entertaining, maybe interesting, and maybe even a little bit useful. And we are talking about S&P 500. Yesterday was a very nice day on the markets. S&P 500 with a gap up, and it broke above 2800. As we mentioned before, based on the normal duration of these intermediate cycles, which is around half a year or so, it was extremely likely that sometime near the end of October, that intermediate cycle had finished, and we were ready to start a new intermediate cycle with its advancing phase. Plus, another indication for a potential bounce was this oversold condition on the 14-day RSI. Even if we are not going to get higher highs compared to what we had near the beginning of October, this oversold condition RSI, this 14-day RSI, was deeply into oversold territory. Was supposed to give us at least some sort of a bounce, and as we see, since late October, from this bottom on the 29th of October, S&P 500 has already increased by 7.7%, something like that. However, at the moment, it's approaching some potential resistance levels, like this 100-day moving average is one of those potential resistance levels. And if we throw in these Fibonacci retracement numbers onto this chart, this 61.8 62% retracement, that's exactly where the S&P 500 is at the moment, might be a potential resistance zone, as well as the 78% retracement level that is near 2870. What I'm trying to say is sometime probably near the second half of November, just like we had within this bounce earlier on in February, there will be pullbacks, but I think in the medium term, over the next several months, the general trend is going to be upwards. So we might see something like this, a pullback from some potential resistance levels, either where S&P 500 is at the moment or from a little bit higher than where it is at the moment, and a subsequent continuation of this rise within the current advancing phase of the intermediate cycle. Over the next few weeks, what's going to affect the market is potentially this FOMC meeting in the middle of December, and there might be some Christmas rally also affecting the markets. So again, what I'm trying to say is on the shorter term, we might see some choppiness, some volatility. However, in the medium term, I think the upwards trend is going to prevail. Now let's have a look at the weekly chart of S&P 500. Again, on the weekly chart, this is a 10-week RSI, has tagged the oversold condition near the end of October, and that is giving us a bounce of 2 weeks already, and this bounce is generally going to continue. And usually, since these intermediate cycles last for about, well, let's say 25 weeks or so, we should expect a rally of, well, at least several weeks, at least. Actually, the previous cycle over here lasted for a little bit too long, So if, let's say, our current cycle turns out to be a shorter one, even then, if it doesn't last 25 weeks, say it lasts 20 weeks or something like that, we still should see at least several weeks of upward momentum in the S&P 500. So to be honest with you, I think we're going to see a higher high compared to what we saw in early October. I think S&P 500 will be above 2900, and again, you might call me crazy, but as I mentioned in one of my previous videos, I think in this intermediate cycle, S&P 500 has a potential to break probably slightly above 3000. And well, even if this 3000 mark on S&P 500 is not broken, I think we at least should make a higher high within the next few months, because one could argue that there is some sort of a channel S&P 500 has established over the last year or so, and with prices moving from the bottom of this channel just a couple of weeks ago to, let's say, the top end of this channel over the next few months, that would put us somewhere between the previous highs, slightly higher high, and the 3000 on S&P 500. But as I mentioned, I think S&P 500 has a nice potential to break slightly above 3000 over the next few months. And finally, on a slightly personal note, as I mentioned again in some of my previous videos, I got into these QQQs at about the price of 71. That was a few days ago, and at the moment we are around 2.5% up. And of course, if one were lucky enough to enter near the bottom of this candle over here on the 29th of October, that would have given a rally of over 9%. So my plan is to keep holding throughout all of the volatility ahead, with all of the FOMC meetings and Christmas rallies, and I would kind of consider selling these triple Qs once we break to the higher highs and probably approach somewhere around 190 or so. From the level of around 171, that would be a gain of about, well, 10% or so, maybe slightly more than that. What do you guys think? Is that wishful thinking, or is that a real possibility over the next few months? Let me know what you guys think in the comments below. Again, subscribe to the channel, hit the like button, and thanks for your attention.